Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about urban-gro, Inc. annual report. urban-gro, Inc. trades at a lower price-to-book ratio of -0.13 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 80% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. urban-gro, Inc. offers a wide range of services to the controlled environment agriculture (CEA) industry. The company provides architectural design, engineering, and construction services that include pre-construction, cultivation space programming, and general contracting. They also offer additional services such as facility and equipment commissioning, crop and asset protection, and property condition assessment. In terms of integrated equipment systems solutions, urban-gro designs, sources, and integrates complex environmental equipment systems including HVAC solutions, environmental controls, fertigation, and irrigation distribution. They also provide value-added reselling of cultivation equipment systems and strategic vendor relationships with manufacturers. The company's services cater to various sectors within the CEA industry, including cannabis and produce markets, as well as commercial sectors such as food and beverage consumer packaged goods companies, healthcare, higher education, and hospitality. With its expertise in designing and integrating complex environmental equipment systems, urban-gro is a one-stop shop for clients looking to establish or expand their indoor cultivation facilities. urban-gro's services include architectural design, engineering and construction facility and equipment, commissioning crop and asset protection, property condition assessment, integrated equipment system solutions, HVAC, environmental controls, fertigation, irrigation distribution, value-added reselling of cultivation equipment systems, strategic vendor relationships with manufacturers. The stock price of urban-gro, Inc. (UGRO) has crashed by over -75.56% in the past year, due to a series of adverse financial and compliance-related news events. The company faced significant challenges with its Nasdaq listing, receiving multiple non-compliance notifications for delays in filing periodic reports and failing to meet minimum bid price requirements. urban-gro's poor earnings report in February 2025, which missed consensus estimates, further indicated weaker-than-expected financial performance. The company's decision to divest assets, including the sale of its 2WR subsidiary and non-controlled environment agriculture (CEA) architectural and construction services business, suggested significant financial distress. The loan default by urban-gro's subsidiary, UG Construction, resulted in Gemini Finance acquiring substantially all of its assets for $450,000. These events collectively painted a picture of a company facing severe financial difficulties and compliance challenges that jeopardized its Nasdaq listing. The company's efforts to restructure operations through cost-cutting measures, including management salary reductions, were too little, too late to stem the decline in stock price. By March 2025, the stock had already tumbled to a 52-week low of $0.60, reflecting a -71.99% decline over the prior year. The accumulation of these issues contributed to a substantial downturn in urban-gro's stock price, resulting in a crash of over -75.56% in the past year. The primary drivers of revenue growth or decline can be identified through a review of recent financial data. In terms of revenue growth, the services segment has been a significant contributor, with a 37% increase from 2023 to 2024. Additionally, corporate/other revenue has also seen a notable rise, increasing by 36%. On the other hand, certain segments have experienced decline in revenue. The equipment systems segment saw an unspecified percentage decrease, although it is noted that equipment revenue specifically decreased by 12%. Furthermore, the construction design-build segment also witnessed a decline of 12% in revenue. These trends highlight key areas of focus for companies seeking to optimize their revenue streams. The analysis of the company's financial summaries reveals a lack of explicit information regarding changes to its debt level and interest expenses. Despite reviewing various notes, including those related to revenue recognition, derivative financial instruments, and income taxes, no specific details were found on these key metrics. As a result, it is unclear whether the company's debt level or interest expenses have changed significantly over time. Management is actively involved in overseeing the company's cybersecurity risk management, ensuring that various measures are in place to mitigate potential threats. The company's strategy focuses on evaluating and selecting geographic markets consistent with its overall business goals. Management also prioritizes developing and overseeing company-wide strategic initiatives, centralizing administrative functions, and monitoring financial and operational performance of operating segments, primarily based on operating segment gross profit. This approach enables the company to make informed decisions and drive growth while minimizing risks. The company has made several significant transactions through its acquisitions and divestitures. In terms of acquisitions, the company invested $2.5 million in Extraction Services, Inc., a specialty finance company that provides capital expenditure financing solutions to CEA companies. Additionally, the company has goodwill totaling dollar amount as of December 31, 2024, which represents the excess of purchase price over the fair value of net assets acquired. On the other hand, the company has also made divestitures, including the sale of its investment in Extraction Services, Inc., for $2.3 million in August 2023. This resulted in an impairment loss of $0.3 million. Furthermore, the company has a receivable related to Great Green Theory, with $1.3 million recorded as part of this claim. The company has agreed to split the legal costs of this claim until the funds are recovered or until the claim is relieved. In summary, the company's acquisitions and divestitures have involved significant investments in Extraction Services, Inc., as well as a sale of its investment in the same company. Additionally, the company has a receivable related to Great Green Theory, which it is working to recover. That concludes the financial summary for urban-gro, Inc. Feel free to comment below, and I will be happy to answer them when possible.